Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with a very special guest, Frank from the Silver Report Uncut. Brand new guest. We're going to be talking about the economy today and really things that people aren't talking about in so many ways. What I feel, and I know Frank's very passionate as well about this, is important, is going to be pertinent to your future, your life, and implications on your money, your wealth, and your family, your legacy, all of these different things. And it's about education and the right education and things that the mainstream really isn't talking about. He's started the Silver Report Uncut YouTube channel. He's got over 40,000 subscribers in a matter of a couple years. I mean, just blowing up. And some of the most interesting, pertinent content that you can find on the internet, sometimes multiple videos a day. He pours his soul into this YouTube channel, so I highly recommend people check it out. But to get a little bit of an insight on what that channel is like, we're going to be speaking to Frank himself today. Frank, thanks for coming on Crush the Street with me.
Hey, no problem. Thank you for having me.
Hey, let's talk about the economy here. We're looking at a lot of just conflicting data. I mean, you have the stock market at all-time highs. It's dealing with a little bit of resistance as we do this interview, but for all intensive purposes, it's still, very, very high. But yet, you have the Fed on the other hand, slashing interest rates left and right, to contain this situation. Where are we in this bull market, if you will, of the stock market and the economy? In this current situation? And, by way of introduction, I feel this is a good overarching question for our listeners to kind of get to know who you are and the kind of work you do.
Okay, so I would say it's just they're trying to deal with the problem. I mean, the Fed is the one who began raising interest rates into weakness in the first place. And a lot of people, they might not be aware of this, but Janet Yellen in the initial discussions, I was tracking this hard when they were debating on doing interest rates. And because I thought it's a very serious deal, because they kept saying they were going to raise them and they wouldn't do it. They kept getting scared, they kept backing down, and it was really showing this weakness in the economy that they're not relaying. But then when she decided to finally go through and cut interest rates, she said two things. One, we were in for a nasty surprise if we did not begin to raise interest rates. And by that, she meant inflation. She said that the system was about to incur a significant amount of inflation, to which Larry Kudlow replied that more jobs, more people working doesn't generate inflation, yada, yada. Number two, she said an issue we had would be these asset valuations. And it was, extremely overvalued asset valuations were a problem, and that was a focus of this interest rate hiking cycle. So issue was, she saw stock prices as too high and thought that they should be lower. So to enact that kind of plan, they began hiking interest rates. So it's not like it was hidden during this time. It's just now we have this confusion about trade. The talk is trade, and there's a reason for this. And you bring up about YouTube, and a very interesting thing we have developing, and I might tell a little track here, but is that our genre is becoming mainstream right now. And it's because there are different motivations for people to talk about the deteriorating economy. This was a very empty room 2 years ago. There was, there wasn't many people out there that were talking about what's going on in the economy, warning about the economy. But we've seen this flip-flop, and now it's going mainstream. And it's kind of muddying the waters, if you will, because you have a bunch of new outlets, and they're mainstream outlets, talking about the economic collapse, talking about the coming recession. And it's kind of, it seems that at this point, we've reached a level of critical mass of information. And Robert Schiller was just talking about this narratives that come in and that are pushing us now, quicker, faster to this eventual event. So I think what the Fed's trying to do now is not really honest. I don't really think they're trying to prevent the economy from crashing. I think some things that they said that they wanted to accomplish is the ability to purchase equities outright. Right now, they can't do that, and the only way they're going to be able to have those options or those tools added to their toolkit would be a crash. So, I don't think the Fed is trying to stop this economy from going down or losing control. I think they're in complete control, in all honesty.
Yeah. Well, let's talk a little bit about precious metals then. Are you of the opinion that the Fed and the elites are in control of precious metals? And what are your thoughts in general on gold and silver? I mean, your YouTube channel, Silver Report Uncut. Let's discuss this.
Definitely. Well, they are in control. They're definitely proving that they're in control. But one thing we are seeing, and the futures market's a joke, right? We know there's not that much silver in the world that's available for sale. It's just a joke. It's a very important substance. So ultimately, I think one day the true demand is going to overwhelm. Now, if we look at the surveys that show us that silver supply, the physical silver supply compared to demand, is constantly running deficit. So there's just not enough physical metal. The futures market, like I said, they're able to, play some games, manipulate the price on there for now. But one thing that I think there's a change of the guard that might be coming that could help precious metals. Number one, they're beginning to indict these people. I know it's not enough. It's a start, though. And they're beginning to move through and to label these organizations as criminal organizations, the RICO charges against J.P. Morgan, starting to dig into these trading desks and these policies. Is it far enough? Well, not yet. It's a start. I think the support for gold, number one, quantitative easing is going to fail miserably. It's not going to work. They're already raising the balance sheet now. That's how bad it is. They've already increased, $187 some billion to their balance sheet and didn't even report it. So it's not really going to work. They're finding it's not enough. So ultimately, that's positive for precious metals. Whenever they do the quantitative easing is where we got that rally back in 2011 when the speculators begin to move in and get excited about it. So we've not reached that level yet, but we do know that we have some major trend changes for precious metals happening. Like, for example, like copper has been being crushed. Copper has been getting beaten down. Iron ore, these companies, they're suffering from these declining prices. We have steel companies filing for bankruptcy. At the same time, silver and gold has more than held its own. They've actually been performing pretty well. That shows us that safe haven demand is beginning to wake up. But is it animal spirits? Not even close. Not even close. It's not there yet. But some of these programs the Fed is talking about getting into, they're great for precious metals because they're just destroy the dollar. All these programs, quantitative easing, whenever they're going in there and doing these, purchases, it just destroys the dollar. They're just creating money. I mean, that's what they want to call it. And at the same time, you can't do the same thing with gold and silver. So we've seen that the bottom, we've seen to develop a new bottom. You see, we were looking at $14 an ounce silver a few years ago. By that methodology, if you were to be purchasing then, you'd be up now. So it's not that bad. So we are seeing there's some stability, a new floor as it's moving up. I don't think silver is ready to really move yet. We don't have the announcements. Once the Fed gets into the quantitative easing, by then we're going to start seeing some excitement on there. And you already know because the world central banks are buying gold like crazy. Russia just added a huge amount of gold. We have China just ordered another 100 tons of gold just for September. So they're already moving, and they're also divesting in treasuries. So the world already has this move toward gold, towards precious metals. I think under the surface, they already know that this time around, these policies, these stimulus measures, they're not really stimulating the economy. They're not going to work anymore. And because they decrease in their effectiveness each time they use them, and they're already, tiptoeing into these policies now, it's having no effect whatsoever. The problem's much bigger. There's just not enough support for the size of this gargantuan economy anymore. We're in a downsizing. That's where we're at.
Yeah, well put, Frank. One thing I'll point out here is for silver to go to its all-time high, or even 2011 high, it practically needs to triple. I mean, there is a tremendous amount of upside at $17 silver for it to go back to its all-time high. But 1980, it was around the same nominal high, except adjusted for inflation.
Yeah,
silver would need to go to $149. That's using the government inflation rate. So, what does this tell you? I mean, using silver as the benchmark as to how high, we could potentially see silver go if it really does kick into gear and go into a real bull market.
That's hard to say. It really depends on what they're going to do with this. Like I said, China's been the big, mediator that has come into the market recently, and they opened up their renminbi gold, gold exchange. They kind of brought, like we see when their market shut down for Golden Week, gold got slammed in the U.S. As soon as they're not trading, you lose that accountability that's in there of another world gold market to help with price discovery. When it was just the LBMA, just the exchanges, the Western exchanges, then you had a problem. Then you had complete control. So I think that's a positive for it. As far as what are the possibilities, right now, I couldn't imagine silver being any cheaper. I consider $17 silver to be cheap, in all honesty. And like you said, inflation adjusted, you couldn't get much cheaper. Commodities are somewhere near an all-time low. So you really can't there's not a lot of downside potential. Like you say, upside is very positive, but we're considerably lower than what you would consider a high silver price. So you have a lot of upside possible. We don't have near the excitement. When you talk about normal price discovery in the market, supply and demand has a lot to do with it. When you talk about precious metals, supply and demand has nothing to do with it. And this is like you said, and that's why I say the Fed is not our friend. Whenever they initially began to try to move the people away from owning gold and silver, where'd you turn in your gold? To a Federal Reserve Bank. You didn't turn it into the Treasury. You turned it into a Federal Reserve Bank. And so they have been the enemies of a strong gold price. These are the people who come out and tell us while they work there, it's a barbarous relic, it's a stone, it's useless. And then they go on to retire, and you have Greenspan preaching gold all across the world. So they're not being honest with this. And it's because gold is a better money than silver. And this is what I was trying to tell someone the other day. It's like, you're not purchasing a product, if you can understand that, because gold and silver is money. You're converting it. You're storing it. When I look at gold and silver, it's not even investing. It's more of a method of savings, if you'll say that. Because if you're in it for speculative purposes, don't waste your time. Buy miners if you want to speculate and try to get rich overnight. It's not necessarily going to happen. But as far as a method of savings, if you look at the historical rise in silver, I mean, this was our pocket change in the 60s. We're talking about coins that were 50 cents in our pocket in the 60s that now are selling, $7. So you talk about long-term appreciation. Is that going to go away? Well, no, history suggests, even though 17 is historically cheap, inflation adjusted, it still is keeping up much better than other investments, you'll say.
Yeah. No, I mean, it's such a powerful thing, and there's so many things going for it. I mean, student loan debt just went to $1.6 trillion. The national debt, the deficit. I mean, there's all these different things that we have going for finite, coveted resources. And, one thing you pointed out was the copper prices, iron ore, these base metals getting clobbered. And is that a signal of the underlying economy not being as strong as we might otherwise be led to believe by the mainstream media?
Oh, certainly. I mean, we have the media. They're changing now. They're not able to hide it anymore. You have these Fed speakers coming out, and they're not able to hide it. They're now admitting there's a possibility, at least. The Fed never admits there's a possibility of a recession unless we're there. So when the Fed starts coming out and saying, we should be cutting interest rates, you have a couple governors and dissenting opinions in the FOMC. This normally doesn't happen. They're normally walking lockstep with each other. You had 3 dissenting opinions, and of those, they felt the need to come out and address the public on their dissent. And, you have Bernard coming out and explaining that we should be cutting 50 BPS because the economy is right on the edge of a recession. The manufacturing sectors already in a recession, or the way, she said it seems to be. But, you have these guys coming out, and girls, sorry, coming out and warning about these things, and it's already trouble. That's like the Bank of India the other day with this PMC bank runs, coming out and telling everyone, don't worry, we want to assure you that the Indian banking system is safe. These rumors, don't get concerned, no time to panic. It's time to be concerned when the central banks are finally admitting there's a problem.
Yeah. Well, I mean, we have such a change of course, right? Now we have something like 19 central banks in this easing mode, and, trillions of dollars of negative interest rate debt circling the globe. One thing that I'd like to ask you and get your thoughts on, having looked into this quite a bit, and talking about the Social Security Ponzi scheme, the ever expanding governments, and all these things are just so unsustainable. When this all comes down on itself, collapses, what gets the blame? I mean, does the media blame it on capitalism? Do they blame it on free market? What do we get following the collapse of the system?
I'm glad you asked me this, and let me get real with you, because I think you talked about how fast our program's growing. It grows because we're real. And I believe that Trump is not an accident. And I'm going to just be perfectly honest. I don't believe he's there because of because that's just what we really wanted. I think we wanted him because they wanted us to want him. And you look at this, and people call it silly. You look at the Simpsons episode, which told us we were going to have a Trump presidency. At the end of that episode, and I'm talking about the old one, 10 years ago, at the end of that episode, the economy crashes. And then who's there? The first female president. And I'm not surprised at all. Warren is pulling into the lead on that side. You can already see the story painted. And so I think that the reason that when he was running and he was candidate Trump, that the stock market was a bubble, the job numbers are a lie, it's all fake, and the economy's much worse, and then we voted for him, right? Because he's right. He can see it. And China's a problem. That's the one thing he's getting aggressive about that I love. I don't mind these tariffs. I hope that they become permanent. And some people have a hard time with that. That's what I don't care. I'm not into this whole global spread thing. I'm not into that. I'm for America. It's okay. But at the same time, the economy all of a sudden becomes this champion cause about this is what I've done. The stock market is my success. And I admit there's a Trump trade. There's a Trump excitement on the stock market. Of course there is. Now there's Trump anxiety because they're talking about impeachment, all that stuff, which isn't going to happen. But the point is, I believe that his job was to take credit for his role. I'll call it that. To take credit for this market, to say, this is my success, and then they're going to crash it. And after they crash it notice the Fed began raising interest rates as soon as he was elected. As soon as he was elected, they began raising interest rates into weakness while he was trying to make everything great. And so we admit that it wasn't so good before. All of a sudden, everything's changed. Now he's saying the stock market's mine. Now he owns the recession. And I don't think presidents have all that much to do with what's going on. I mean, the economy moves very slow, all right? The problems we face now, like I said, are a demographic problem. They're a debt problem. They're a lack of ability to pay for what we thought would be production 10 years ago. We borrowed that already. So.
Well, that's powerful. So based on what you're saying, you don't really think Trump's got a chance he's not picked for 2020.
I don't know. He might be. I mean, he might be. I don't know. I can't say all that. I just know that I believe that the economy, I believe that they're in control. I think it's clear. They're in control. Yeah. 2008 didn't happen by accident. They benefited. When you want to know why something happens, look who benefits in the end. Look who gained. And these banks have not taken a day of losses while the American people have lost their homes. Of course, the credit scores, lots of other things. A lot of people went through some painful bankruptcies, but these banks, they don't go through any problems. So, I don't think that these things are by accident. And when this economy goes down, I don't think it's going to be by accident. And I think that the narrative that they've chosen is that this is a Trump trade recession. That's why they talk about trade so much. And if you think about it now, it's gotten to the point where trade actually does move the market. So whether it was real or not before, now it is. Now it's become the narrative that the Trump trade recession. And so now he's to blame. And like you said, now capitalism is to blame. Now your views are to blame. So while we thought that it was something for our cause, now all of a sudden we are the scapegoat. Our free markets is the scapegoat, and to replace it, to fix this mad idea to, cut taxes. That's just insane, right? Like we would want to pay less money to the government, and all of a sudden now that's going to be viewed as the problem. Now we need higher taxes, of course. Now we need more progressive policies that are going to, of course, save us from what the free markets have done to the people here.
Frank, I'd like to get your thoughts, since you cover the economy so well. You also cover precious metals and you understand sound money. What have your thoughts been on cryptocurrency, specifically Bitcoin as the first mover and, kind of the gold standard within the crypto community?
All right, this is easy. And I can be clear on this. And I'll be honest, I think Bitcoin is the strongest of all of the cryptocurrencies right now, unless it's XRP. I think XRP is chosen to win. And the reason I say that is because, of course, it's the central banker coin, which is why I believe that no one should buy this coin. And I think it's chosen to win. But besides that, Bitcoin is so strong that when you see major market moves on all of the altcoins, they just get pummeled, while Bitcoin is pretty much a good place to hold on to. It's better to Bitcoin up than to tether up at this point whenever you see drops, because Bitcoin has that extra layer of stability. It comes back at its popularity, but in honesty, the trend is down. Sentiment has clearly changed, and we have a tide that's going out. And I mean, yeah, I might, if Bitcoin goes to 3,000, mark my words, I'll buy 10 on air. But, but when it gets there is what I'm talking about. So maybe in the long run, if not, I don't really view, I love precious metals because I believe they're the answer. They're the solution. A digital currency is not the solution, it's the problem. Even cash is better than a digital currency in the long run. I like it as a payment system. You can transfer across borders. I think in some countries they love it because there's capital control, so there's that. But at the same time, I think that it's much more traceable than people are giving it credit for. And gold and silver, like you can cross the border the same way with gold, with a roll of gold eagles in your pocket and declare it as face value, $50 a coin, and get over there and carry 40,000 in your pocket without a big deal. So, I mean, gold also has some of the same qualities that crypto does, but yet it's more anonymous. You can go into a coin shop and start, building a savings, buying a silver eagle at a time, $20 a piece, and start saving up until you have a fortune that no one even knows about. So that's valuable to me. And to think that gold and silver will ever be worth nothing, that people don't know what they're talking about at all. Gold and silver has been money for years, thousands of years, and it still will be. Any country in the world, if you have gold with you, you can get cash in that currency. So to think gold and silver is gone, that's a mistake. So I know crypto is already anointed as the future. So are we going to get there? You're right, we're going to get there. Do I always think, I feel like if Bitcoin is not from the elite, as some term it, then it will not succeed. If it is, I wouldn't want to be a part of it. Does that make sense?
Absolutely. It's one of those things, and simplified, it's a matter of, are there going to be more buyers of crypto or Bitcoin specifically than sellers in the future? Because if that is true, then it's going to go up from here. But then, of course, for what reason? And then that's all the things that we can discuss, spend days and it has to do with the economy too. But a lot of people just don't feel that Bitcoin is a real alternative to precious metals. And you alluded to that as well. It's a digital asset, and you really can't print. It's impossible to print gold and silver. It's finite, and it's limited. Whereas something like Bitcoin, people can disregard it and say, hey, you know, we got this new kid on the block, this new cryptocurrency, and, you know, Bitcoin goes away, which I don't think is likely, but it's possible.
But oversaturation is a problem. It's already a problem now. You've got, you know, all these ICOs coming out left and right because there's a frenzy in the market. And now, I mean, we do see some of that sentiment has turned back, but oversaturation for sure. Because what kind of world, if we're living in a world with 1,000 monies, then there's no money, you know?
Right.
We've been there before. Frank. Gold and silver brought us out. Yeah.
Frank, I'd like for you, if you would, to leave us with some closing thoughts here, kind of maybe some general advice for people, how to kind of approach the rest of 2019 here. And of course, let people know what they'll find if they visit you at your YouTube channel and the kind of content that you put out for them.
All right. So one thing that I would like to leave people with is to unplug from the cable news for a little bit more and spend a little bit more time reading with your kids. That's what I would think the best way that you could spend 2019, because in the long run, we can't do anything to change what's coming. It's coming, all right? It's coming. And in all reality, there's no amount of preparing you can do to really be ready, because we don't know what the world's going to look like. What we do know is you have today, and if it's a demographic issue, then, you know, maybe it's that we need to realize that these kids are our greatest asset, and maybe we should be building a bigger future ahead of us, having more kids. So I know it's not about the economy, but that's what I would want.
That's good stuff. I love it. I love it. Yeah, definitely be proactive and invest in yourselves and your families, and start to really think about what is important in life, because it's so easy to get distracted by, you know, information overload, and you don't really know what to hone in on. And that's definitely something that I even struggle with. I mean, I got a smartphone and I get access to the internet just like everyone else. And my gosh, it's so difficult sometimes to really hone in on what is going to be important for me tomorrow, 5 years down the line, 10 years down the line. So that was good insight right there. Frank, thank you so much for coming on Crush the Street with me today. I hope to do this regularly with you. Hopefully in another month or two, we can jump on another call and give our listeners another update.